Hi guys, welcome our weekly market video analytics. I'm Cuzin, your host on behalf of Liteforex, which is one of my top favorite brokers, and it is the main reason I've accepted their invitation to come here and share with you my personal trading activities live, and that's exactly what we're going to do on a weekly basis. Now, a little bit about myself. I've been trading the markets for a little bit over 15 years now. In the last 5 to 6 years, I've been basically trading the markets for a living. I've been able to sustain my living expenses with trading the markets, and I basically live the laptop lifestyle, if you will, where I just travel the world, and I just take me with, I take with my a laptop. Wherever I go, I open the laptop and I trade the markets, whether it's in the morning or at night, whenever I feel that it's most suitable. And I'm going to share with you my real-time trading activities, and I'm going to start today with reviewing the US dollar. So we're going to look at the dollar index, right, which is the X factor, right? That's the main factor that drives the trends in the Forex market, right, in the foreign exchange market. So you got to be on top of the dollar index at all time, because that's going to reflect your decision-making process with regards to the rest of the currencies and the rest of the opportunities. So, are you ready? Let's go. Let's take a look at the dollar index. I'm also going to share with you my personal two positions that I have, two open positions that are live right now, that involves the US dollar, and that's as a result of what I'm going to show you right now. So take a look. Alright, so what you see here, this is the US dollar index weekly chart, right? And what I see here basically is a very strong bullish opportunity right now, right here. And I'm going to share with you the technical picture. It's quite interesting. I mean, first, let's talk a little bit about fundamentals. From the fundamental point of view, right, it's all about the US dollar right now. The Trump administration, which basically reversed a lot of the economic setup that was made in earlier administrations, is completely reversing everything with regards to trade deficit, trade balance, and it's all good for the US dollar. Also, we're talking about the rise of the interest rate, right? So fundamentally speaking, the US dollar should remain in the driver's seat, so to speak. From the technical picture, I would also suggest they're pretty much in line. Take a look at this, for example. Price went down. We saw that downside move here in the previous couple of weeks as a local downside correction rather than a complete reverse in trend. So obviously the trend is up, and it's going up pretty much from the beginning of the year, right? However, in the last couple of weeks, we saw some downside move. But take a look at this particular downside move, because what I have here is my system, my symmetric system that gives me the key levels, right? It gives me the support and the resistance levels, which I can in turn decide whether this is a genuine downside reversal or just a downside correction. So what I see here, and take a look at these two levels, right? These particularly two important levels. The first one is the 94.45 right here, and the second one is the one right below, the 94.12, right? So the 94.12 happens to be a local support level, while the 94.45 is a mega support level coming from a higher time frame. But what's interesting to me was the fact that price on the downside was trying to break the 94.12, right? That was last week. And even this week was already trying to challenge that level from above. You can see how it actually traded well below that level, but in both cases, it came back all the way just to close above. And you can see my marking right here in the blue square. So this suggests that this is a powerful, really powerful support level. And it also suggests that price is unable to break through, which means that the downside correction is probably over. Now, I want to take you to the higher time frame actually, because I want to show you the 94.45 level, where that level is coming from. So here I got this particular setup. that basically represents a trading range. Now this trading range you can track back all the way, believe it or not, to the beginning of 2015. That is a huge range, right? I mean, very wide, but it is still intact. It is still valid, meaning price still moving from up to down in relatively, defined range, right? And here's what I find to be quite interesting. This particular level, the 94.45 that I talked about just a minute ago, has been broken a few months ago. Take a look. I mean, there was the first attempt here to break that level. That failed. But the following month was actually a success. It was just a tight close above that level by just a few points. But ever since it did close above that level, that was on June, you can see how price from that point on started to challenge that same level, this time from above. You can see what happened here on July. Price was trying to break back below that level, failed, right? Bounced back, closed right on the spot. And even last month was touching base on that with that level and beginning to break away. Now we see this month, right? This particular month, September, we see the attempt to break below again. Now we only have 5 more days to the end of the month. Now I think that price is going to be able to come back up and close the month above 94.45, and that would be a huge bullish indication that we're about to see price continues on the upside, which is very important. I mean, it all boils down to the close of the month, right? From that perspective, or from a long-term perspective, if you will. From a shorter-term perspective, I would show you here the situation here on the weekly chart, where you can see that we got that 94.12 level as a strong kind of floor, if you will, that completely broke the downside move. So in terms of short-term perspective, I already established a bullish position, and I'm going to aim at 95.43. That's going to be a short-term price target, right? Just for the local price action. On the longer-term perspective, let me suggest to you this particular price target, 98.56, which is a very powerful key level to aim at. All right. Now, I also mentioned the fact that, I mean, we're looking at the US dollar index here. It looks pretty bullish from a short-term perspective, but also a long-term perspective. But let me take you to another interesting situation, technical situation we got on the gold. Now, the gold, this is the dollar-based gold. Right, so this particular gold trades against the US dollar. Now, if the US dollar is about to continue to gain strength over, the rest of the currencies, this one is no different. So the gold should be going downwards if it is for the US dollar to keep strengthening. Now, here's the particular technical situation we have here. Take a look at these two levels. Let me close in a little bit. The first one is the 1207. This is an extremely powerful level, right? An extremely powerful resistance, by the way. It was a support just about 3 weeks ago, 2 or 3 weeks ago, where price completely broke that level. It actually crashed that level. It was a strong support. It broke, and price on the way up, what it did was retested that same level, this time from below, and I'm going to show you that on a larger time scale. But I just want to present to you, introduce to you these two levels, and you might want to write them down. So we got the 1207.7 and a local one, the 1201.35, right? We got the black one, we got the blue one. Two powerful key levels that come from my main system here, my support and resistance system. So you can see that just recently, price was basically trading on a very tight range. Take a look at the range right there. But what's interesting to me was the reaction it had on that same level I was talking about, 1207.7. Take a look at what I've marked here by that blue square here. You can see that spike. Price was basically challenging the level, trying to break through, bouncing back, closing below, and on the second attempt, quite the same. Now, also, I would like to suggest the 1201 as a resistance level. I mean, weaker. It's a local resistance, but you can see the reaction we had here. and also just yesterday, where price was trying to break above that level and failed. Now, at this point, I think that this tight trading range is probably about to be over, which means we're going to have a breakout. Obviously, the main question is always to which direction, but I would strongly suggest that in this time it's going to go downwards, and according to my blue system here, my blue symmetric system here, that points out for a downside move all the way to the 1172, which is the next major key level. Now, from the longer term perspective, let me show you what happened here, which is why I believe price should continue on the downside. It basically, now you can see this this particular level, the 1207. Take a look at the close we had here just last month, right? Now that close below the 1207 suggests that this level was broken. And if I read this correctly, and I usually do, this is a powerful pivotal point, which means the point of no return. So once got broken, price should continue without looking back, so to speak. And you can actually see what's going on this month that supports exactly what I'm trying to say, right? Take a look at what happened here. Let's just try to imagine what happened here all the way to this point. So price was on the upside at the beginning of the month, and it was basically, as you can see, just a little bit of a spike there above that level. It was actually trading above that level at some point, but was unable to carry on with the upside momentum, but rather bounced back down, right? So it still trades below the level, and that spike suggests what I'm saying, that this is an important pivotal point. So if it is the case, then we should expect price to continue on the downside, which means the US dollar will continue to outperform the gold in this case, right? Now the next long-term target has to be the 1124. The 1124, this is the next powerful key level. So if you're long-term, you want to aim at that level. But if you're a short-term trader, should I say short to medium-term trader, you probably want to focus on this particular level, the 1172.75. All right, so this is the goal, suggesting that the US dollar should continue on its upside trend. But here I have a second asset that involves the US dollar. In this case, this is the dollar versus the Swiss franc. Now here we also have a powerful technical picture that points out for an upside reversal, in this case a full-fledged upside reversal, not just an upside correction. Now here's the reason I base my case here. So first, I got this powerful level. I got two actually. Belongs to two different setups. The first is the 96.24. That's the imminent one, and that's also the local support level, if you will. A more powerful one is the 96.51 level, right? So we got the black here, and we got the purple here. Now, on the very edge of the downside move, what happened here was this particular pattern. Take a look. These are three bars that represent a reversal pattern, a Japanese reversal pattern that goes by the name of Morning Star. So we got that on the edge. Price went back and closed back above that 96.24 level. And also today you can see how it kind of touched base with that level, and right now it's busy breaking the next one, the 96.51. Now, if you want to look at the bigger picture, then I can show you what's going on the monthly perspective, because this is really fascinating stuff. So you remember this level I was just talking about, 96.51, that's the big level I was talking about, right? Coming from the monthly perspective. We got this huge monthly trading range that you can track back to pretty much the beginning of 2016, and that's a massive trading range. But what's interesting to me is the fact that price came from below after touch base with the very bottom key level, started to make its way towards the higher section, but in the middle of the way it went for a downside correction. But this downside correction, amazingly enough, was unable, right, to break below the 96.51 here. Take a look. It's just, this is happening right now, right? This is right now, this is this month, leaving us this huge, this very long spike, and basically base itself back above 96.51. Now that's a powerful bullish signal, all right, on the long-term perspective. So what I expect here is for this downside correction that took place over the previous, I would say, 5 months, this one should be over and clear the path for the next bullish move, or should I say the next bullish segment. From the long-term perspective, we expect price to hit the 101.18 level at least, at the minimum. On the short-term perspective, however, this is the situation. We're looking at the purple system here, and this is the main level I'm looking at, 97.40, which represents about 80 pip. This is also where the 230 moving average is, so it just enhances that level as kind of a magnetic field, if you will. So we got the very imminent price target for intraday traders at 96.78. The next one, 96.40. Once we break above that level and further above the 97.93 here, I think there's going to be that full-fledged upside reversal I was talking about, and price will probably continue to move upwards for a long time. So once again, we got a bullish outlook on the US dollar within the currency pair of the US dollar versus the Swiss franc, right? Interesting stuff. So yeah, there you go. These are two actual positions that I hold: a bullish position on the US dollar versus the Swiss franc, a short position on the gold, and I also have a bullish position on the dollar versus the dollar index, of course. Alright guys, I hope you enjoyed this session. I sure did. Don't forget to subscribe to our channel, and now that you got me here sharing my personal trading activities, you're in good hands. So you might as well open a demo account, maybe open even a real account, and try to follow our leads, because we're gonna kill it. So in the meantime, I'm gonna say goodbye, and I wish you a great trading day, and we'll see you next week. Bye bye.